The thought of buying your first home is very exciting, but at the same time, this is probably the biggest financial purchase you could ever make. So today, I want to take some time and break down the 13 steps to buying a house. Grab a notebook, get an energy drink if you need. This is going to be a little bit of a longer video, but I promise today we are going to answer a lot of questions that you may have about what the process looks like for buying your first home. So let's get right into it. The first step to buying a home is figuring out, are you financially ready? This is one of the first things that I talk through when I am sitting down with first-time home buyers and we are doing a consultation. So with this, the first thing that you need to figure out is, do I have sufficient income to buy my first house? What that looks like is, if you are on salary, I want you to consider, could 30% of your income go towards a mortgage payment? So let's take rent out of the consideration for right now. Do you have about 30% of the income you have coming in available for a house payment? That's a good thing to consider. If you are hourly, you would need to consider, do I get consistent hours? Are my hours regular? The main reason you need to consider this is because lenders are going to look at the money that you have coming in. And if you are hourly, that depends on the hours that you work. So if your hours are fluctuating greatly, it can be hard for a lender to determine how much you could pre-qualify for because your income is fluctuating as well. So that's something to consider. Ideally, if you are an hourly employee, your hours are fairly consistent by the time you are buying a house. Regarding your income, lenders are going to want to see a pay stub as well as a copy of your W-2s because they will need to verify the income that you have coming in. Lenders are going to look at this information so that they can guide you as to how much they can pre-qualify you for when it comes to getting a loan. Another thing that I want you to ask yourself is, how is my work history? Most lenders are going to want to see that you have been gainfully employed over the last 2 years. And don't be surprised if when they're looking at your employment history, they ask you to explain any gaps that you may have had in employment. And of course, reasonable gaps are expected. For example, if you had to stop work because you were pregnant and went on maternity leave, that is completely acceptable. That's not going to disqualify you from getting a loan. I do want to mention that schooling can also count towards your work history. So for example, when I bought my first house, I was only about a year out of college and into the job force. But when I applied for the loan, the lender was able to use my past year in college as quote unquote work history. And they were only able to do that because my degree and my field were very similar. So if you studied something and then ended up working immediately in that same or a similar field, college time can be used towards that total work history. So if you are a recent graduate, don't feel like you are automatically going to be disqualified from getting a loan. It definitely happens a lot where they use schooling as part of that work history. The third thing that I want you to consider when it comes to financial readiness to buy a house is, what is your credit score? Now, most lenders are going to want to see around a 640 credit score or higher when it comes to qualifying for a loan. Now, of course, there are some programs that are going to start at lower credit scores, some even in the 500s. But just remember, the higher your credit score is, the better borrowing terms you are going to receive. You're going to receive a better interest rate and you're going to have extra programs available to you. Now, I do want to mention something when it comes to credit score. Lenders are going to need to pull your credit. It's going to be a hard inquiry when you apply for a loan, and they are going to pull your credit score from all 3 credit bureaus. Now, when they do this, they're going to get 3 scores. They will take your median score. So they're going to line up those scores from lowest to highest, and whichever one is in the middle, that is your credit score for your file. Now, with this, you may be thinking to yourself, well, Nicole, I've heard that I should shop around for lenders. How should I do that if multiple lenders would need to pull my credit? You can shop lenders and fill out multiple applications within a 45-day period. This will not penalize you. Even if all of those lenders are pulling your credit, it will be bundled into one hard inquiry. So you will not be punished for shopping around and trying to get the best interest rate for yourself. Step 2 to buying a house is figuring out how much you can afford. Now, in order to do this, you are going to want to calculate your debt to income ratio. Lenders are going to want to see that your DTI is less than 50%, including your house payment. So something to consider is, can half of my total income cover all of my existing debt payments plus a mortgage payment? So for example, if I have $6,000 that I make every month pre-tax, could I cover all of my student loan payments, credit card payments, and a house payment in half of that, which would be $3,000? If yes, then you would probably be in a good point to apply for a loan. Now, in order to figure out how much you could afford, you would want to dive into a debt to income ratio calculation. I do have a full video where I break down DTI, and I will link that in this corner. But for a quick calculation, in order to calculate that, you will do your monthly debt divided by your gross monthly income times 100. That's going to be your debt to income ratio. So for example, if I have $1,200 in debt payments. So you don't count your rent in this. This would just be things that are reported to your credit that you pay on, like child support, like car payments, credit cards, student loans. So add up what you pay to those monthly, divide that by the total amount of money you have coming in. So for this example, we'll do $6,000 equals 0.2% in this case, times that by 100, that's 20%. So my debt to income ratio is 20%. So I would still have some room under that 50% for a house payment. So I'm probably in a good spot when it comes to DTI. Step 3 to buying a home is to ask yourself, do you have savings? Newsflash, buying a house is not cheap. You do have to have some savings in order to make this process go smoothly. The first thing that you would need is savings for a down payment. A down payment is going to start at around 3% and go up from there. So that is paid at closing, and your down payment is just going to be a percentage of your overall purchase price. You also need money for closing costs. Closing costs are typically around 3% of your purchase price as well. So as you can see already, if you were to get a minimum of a 3% down conventional loan or a 3.5% FHA plus 3% in savings for your closing costs, you're looking at about 6 to 6.5% of the total house price that you would need to have saved. So savings are no joke when it comes to buying a house. So for example, if you were looking at a $250,000 house, that would be $7,500 in closing costs, not including that down payment. Adding the 3% down payment to that would mean that you would have to have upwards of $15,000 just to cover your down payment and your closing costs. So it is something that you need to be planning for a good amount of time before you start filling out loan applications. Lender fees, title work fees, appraisal costs, and prepaids are all grouped together and they form your closing costs. So your closing costs and your down payment are paid at the closing table, but it's important to have this money saved up ahead of time. Of course, there are some exceptions to this. Can you use down payment assistance? In some cases, yes. There are some type of seller concessions to where you can offset some of the total amount of closing costs. So if you are a very determined home buyer and you're just a little bit short on savings, I'm not saying that buying a house is impossible. There are workarounds, but this is just kind of the best practice steps to set yourself up for absolute success. So if you have gone ahead, you've completed steps 1 through 3, then you are ready to move on to step 4, which is hire the best realtor. You are going to want to get yourself a buyer's agent. Now, it is so important that you understand as a first-time home buyer the difference between a buyer's agent and a listing agent, the agent that represents the seller. So realtors can work for either party, and sometimes they can work for both the buyer and the seller. But keep in mind, it is the duty of a realtor to represent the best needs of their client. You need to find out when you are hiring a realtor, am I hiring this agent to represent me as a buyer and my needs alone? Or are they also open to representing the seller of the home that I am interested in? It's something called dual agency, where an agent would represent both you as the buyer and also represent the seller. So that means you have one agent trying to kind of represent the needs of both parties, which can obviously get kind of tricky. What I advise my clients to do is work exclusively with a buyer's agent. If I am talking to a first-time home buyer and we're talking through the process of what it's like to work with me personally, I will let them know and we will write it into our agency agreement that I will not represent the seller of the home that they are trying to buy. I want them to know that I am exclusively representing their best interests. And that's what I want for you guys as well. So find yourself a buyer's agent. Usually this comes at no cost to you. When a seller lists their home for sale and they hire their own agent to advertise the property and represent their interests, the commission that they pay is often split between the agent that they hired and the agent that brings the buyer. So it's not always no cost to you, but in most cases, there will be no additional fee for you to use a buyer's agent. Now, in order to hire the best realtor, there are some things that I want you to look for. The first thing is this agent familiar with your area? Are they familiar with the area that you are trying to buy a house in? This is very, very important because obviously you want someone who knows the ins and outs, who has sold multiple properties where you are trying to buy. The second thing to consider is, does this agent work with first-time home buyers? Some agents do not anymore, or some agents are too busy to where they may not be able to give you the time that you need to guide you through the process. They may be so used to working with repeat buyers who don't need as much hands-on guidance. So it would be a good thing to figure out, does this agent work with first-time home buyers? Have they done so recently? I'll go ahead and throw in there that in some cases, your realtor is also going to kind of turn into your therapist throughout the transaction. So you want to make sure that you like this person and that you are going to get along. I've gone ahead and taken a lot of the work out of this for you. In the description, you will find a link to getting matched with an agent in your city. So if you go down there, you can put in some information, tell me about where you are looking to buy and your situation, and I will make sure that you get matched with someone great to help you through this process. So hopefully step 4 got a little bit easier for you right now because we do have some more to get through. Step 5 is to get a loan pre-approval. A pre-approval lets you know your maximum purchase price. This shows to your agent and shows to the seller that you are a serious buyer. You've already got all your ducks in a row and financially you are ready to make a purchase. There are several different types of loans that you can get pre-approved for as a first-time home buyer. The VA loan is a great option for veterans out there, and it is a zero down loan. The USDA loan as well is another option that is zero down and lets eligible buyers buy in rural areas for no down payment. Of course, you have the FHA loan, which starts at 3.5% down. Excellent option for first-time home buyers. That's actually what I used to purchase my first property. And you have a conventional loan. Conventional loans typically start at 3+% down. Notice you did not hear me talk about needing 20% down payment to buy a house. With these loan types, you would need 20+% to avoid something called private mortgage insurance, or PMI. This is paid to the lender in case you default from the loan. So if you have less than 20% down payment on your loan, PMI is going to be factored into your loan. This is just an extra monthly payment grouped into your total mortgage payment that you will pay with your loan. Tons of people pay PMI. Don't feel like you're being punished, but it just kind of comes with the territory. So you don't have to have 20% down payment in order to get a loan, But if you do have at least 20% down payment, you avoid the extra PMI. I want to go ahead and add an extra note that it is so important to get pre-approved before house hunting. Please, please, please get pre-approved first. You have to keep in mind as well that lenders are in the business of lending money and making money off of the money that they lend to you. So just because they say you can afford a certain price point doesn't necessarily mean that it's best for you, because they will be looking at your pre-tax income before taxes and before your personal expenses just to live come out of it. I want you to make sure that you are comfortable with the overall sales price that a lender tells you can afford, but also the monthly payment that is associated with it. That way you're setting yourself up for financial success rather than financial stress. All right, step 6. This is what everyone has waited for. We can start house hunting. Now, what I would love for you guys to do at this point, not now if you haven't finished the first few steps, but once you get here, you can make a dream list. Now, I love to recommend that my clients break this down into what do they need to have in the home versus what do they want to have. That's going to make your house hunting process go a lot smoother. You have to keep in mind that there's a lot more that comes with house hunting than scrolling through Zillow in bed and attending open houses on the weekends. Once you've made your list, you are going to want to start house hunting hand in hand with your agent. Your agent will likely send you properties and you can send them some as well. Then you'll go with your agent who will set up showings for you guys, and you can privately tour homes that you are interested in. Alrighty, step 7 would be making an offer. My biggest advice here would be don't wait too long to make an offer on a house that you really like. Because if you are looking at a property, chances are other buyers are as well. A night to think over a property could honestly make you miss out on the house. Because if you saw a house today and you're like, let me think it over, I might get something in tomorrow, the buyer who saw it yesterday is getting their offer in today. So it's definitely something to take seriously. In most markets, sellers typically get 24 hours to respond to offers. And then when they do respond, they could either accept the terms that you've written in your offer, they could reject the offer completely, or they could counter the offer. And keep in mind that just because they reject the offer doesn't necessarily mean that the negotiation is over. You would still have an opportunity to submit a new offer if you chose to do so. Alrighty, step 8, get a home inspection. Hopefully at this point, the seller has accepted your offer or you've worked out the details of your counter and everything has been accepted. So you are officially under contract. Now your due diligence period finally begins, and that's where we move into step 8, which is get a home inspection. A home inspection is one of the only out-of-pocket costs during the home buying process. This is typically around $350 and goes up depending on how expensive your market is. I highly, highly, highly recommend get a home inspection. If there's one thing that I want you to take from this video, it's that when you go under contract, you need to get a home inspection. Home inspectors are trained generalists, though, not specialists. So as a first-time home buyer, you may not know what everything is supposed to be, how everything is supposed to work. Like, do you know how to test an HVAC system to see if it's heating and cooling properly? I don't, and I sell houses all the time. So it's a great idea to hire a home inspector who's going to test everything in the home, go under the home, inside the home, on top of the home, check out the roof, just to give you a full report as to the, I would say, health or like a report card on the home. A big thing to consider here is that no home is going to be perfect. Even a new construction will have some things mentioned on the inspection report. So don't expect a completely clean slate inspection report as a good indicator that your investment is a great purchase. All homes are going to have some things noted, and that is ultimately what you are paying the inspector for. Once that home inspection is complete, you can move on to step 9, which is negotiating repairs. Unless you made an as-is offer, you will have the ability to negotiate some repairs with the seller. What I always talk about with my clients is that any items that are not working properly, are warranted repair requests. So for example, if the inspector notes that a drain under a sink is leaking, that is a great thing to ask the seller for, because a drain, if working properly, should not be leaking. But if I ask the seller to repaint the walls, they're probably not going to do that because that's more of a cosmetic thing. The walls are here and the walls are functioning as walls. Typically, once you submit your repair request list, the seller will have a few days to respond. Like in Arkansas, in my market, the seller has 5 business days to respond to the repair requests. They can do this in 3 ways. They can agree to all of your asks, they can agree to none of the repairs, or they can agree to some repairs. So they can say, we'll do A and B, but not C. If you can come to agreeable terms with the seller, then the seller will start working on those home repairs. Then you can move on to step 10, which is securing home insurance. You want to make sure that your investment is protected. And you do this while you are under contract, because if you, for some reason, cannot find marketable home insurance for the property you are trying to buy, most states will give you the right to back out of the deal. So that's why you find home insurance while you were in this due diligence period. A lender is also going to require that you have home insurance and keep an active policy on the house while you have the loan. In addition to homeowners insurance, your property may be subject to additional insurance. Some of these would include flood insurance, earthquake insurance, or even fire insurance. At the same time that you are finding insurance, we are moving into step 11, which is having the home appraised. Your lender will order the home appraisal for you, and the appraisal is going to protect the bank, not you. So I just want you to keep that in mind. The appraisal is done because the bank can only lend up to the appraised value of the home. The bank's not going to give you more money to buy the home than the home is worth, because then if you, for some reason, worst case scenario, couldn't make your payments and you defaulted on the house, then they have money owed to them that exceeds the value of the house. So they're going to make sure that the amount that you get from them to buy the house is going to be justified by the appraisal. There are 3 appraisal outcomes. The appraiser could come out and appraise the house above sales value. This is great because then you have some built-in equity in the house. For example, if you are under contract on a house at $250,000 and then the appraiser comes out and says, actually, I think this home is worth $262,000. That's great. You literally just got $12,000 worth of equity in your property. Now, the house can also appraise at sales price. This happens a lot. The appraiser will know how much you are under contract for on your property. So they may literally give you the exact same sales price as your appraised value. And then the third outcome is that the house could appraise below sales price. In the event that the house appraises below your contract price, you would not then get enough money lent to you to buy the house. So you have 2 options. One, if you have cash reserves that you could use to cover the difference between the appraised value and the contract price, you could put extra money down to cover that difference. The other option is that you can work with the seller to then let them know that the house did not appraise and try to use that as grounds to bring the purchase price down to the appraised value so that you don't have to come out of pocket anymore and everything can move on just fine. In most balanced markets, usually the seller is pretty understanding to the house not appraising, and usually they will reduce the purchase price down to the appraised value. We're almost there, guys. I promise. Take a little sip of your coffee, your Red Bull, whatever you got. 2 more steps. Step 12 is your final step before your closing, and it is your final walkthrough. You want to make sure during this time that all of the agreed upon repairs that you negotiated with the seller have been completed. You can personally check these items out. So you can go around the house and say, oh, have they fixed that leak under the sink? Is there, you can run the faucets and see, is there any more water coming out? You can also choose to get receipts of the repairs being done. This is something that I have done with my clients. Anytime that there's something that may be a little bit hard to visually inspect yourself, it's a good idea to ask for receipts of the work being done. Or you can also get a re-inspection on your final walkthrough day, which is where you would hire that inspector to come back and he or she would check for the items that you requested and make sure that they were complete. This may seem silly, but even if you asked for no repairs, it's always a good idea to still do a final walkthrough. You want to make sure that the house is still standing and in the same condition as when you last saw it before you sign on the dotted line and buy the house. Once you've done your final walkthrough, it is officially time to close on the house. Step 13. Prior to closing, you are going to review and sign your closing disclosure. Legally, this will be sent to you 3 days prior to closing, usually in an email. And this document will include all of the financials of your transaction. They will dictate exactly what your purchase price is, how much your down payment is, all of the insurance and taxes and prepaid amounts. They're going to cover all of the closing costs amounts for lender fees, title work fees. It is a full breakdown of the financials of your transaction. You will also want to arrange payment of your cash to close via a cashier's check from your bank or a wire transfer. And your agent will help you through this process, but you will need to arrange your cash to close, the money you have to bring to the closing table, ahead of time. You can't just roll up with actual cash or, a briefcase with your down payment. When it's actually time to go to closing, you will either head to a title office or you will head to a real estate attorney's office for the closing. The main things you need to remember is don't forget your ID or driver's license. And if you chose to bring your cash to close with a cashier's check, bring that with you. Usually your agent will attend your closing as well, so you will have them there for any questions. Real estate attorneys and the loan closers that work at title offices are great at answering any questions that you might have regarding your loan and what comes next as a first-time home buyer. But that's it. If you make it through all these steps, you will have officially bought your first house. Now, if you have any more questions about the process of buying a house, let me know in the comments below. I will be checking and responding to any questions you might have. Now, I want you to do me a favor, since I know this was a little bit long one, and I appreciate you sticking it out. If this video helped you, head over to my Instagram and give me a follow. The reason being, if you take a picture at your closing or in front of your house and post it on Instagram, make sure to tag me. I love knowing that I was even just a small part of getting your home buying journey started. I'm Nicole Nerg, Arkansas real estate broker, with videos to help you find your way home, and I will see you in the next one.